Anyhow.
All right,
Yes.
guys. We're live. Welcome everybody to our Crypto Mining Tools podcast. I think we're at, maybe number 35 episodes here. I'm looking forward to maybe getting to 50 very soon. But today here, I'm your host, Scott Offord, and we have our co-host over here.
Hey everybody, Ethan here. And then we've got Scott Hancock, and we call him Scotty because the two Scotts. Well, yeah, the two Scotts we get mixed up. And then we have Mike over here.
Mike, what's your last name again?
Groff, Groff.
Groff.
Yeah, Groff.
Right. Okay. So today we're talking about a very interesting topic. We haven't really discussed it on our podcast before. So there will be some education about some different terminology and a really different part of this industry. I think a lot of people have heard about mining and different ways to get into mining. There's different ways to invest. There's also some very negative connotations about cloud mining. But I think Scott and Mike today can really clear some of these misnomers up and really shed some light on a new interesting way to get into the industry. So Scott, why don't you just kind of introduce yourself? Tell us a little bit about your background, what you're up to. I know you're involved in a few different companies and ventures, and then you're also working along with Mike too. So yeah, why don't you just tell us a little bit about what you're up to?
Sure. So let's see, about 2.5 years ago, I was blessed with the opportunity to be a part of Mining Store for a while. So got to learn a lot about the industry, really enjoyed my time there, wish them the best. About 60 days ago, I started my own consulting company with the idea of providing a complementary suite of products so I could talk to mining groups, investors, individuals interested in getting Bitcoin mining exposure and listen to what they need and be able to offer something that really met those expectations and serve the customer. So I'm running the business development and sales for Wadham, BitRiver, and Supplybit as well. So very excited to be here today.
Well, that's awesome. That sounds like you've got a lot on your plate.
Yes, I do. But love the space. And
you have a 4-year-old daughter or something as well that you're balancing?
I do. Before I got on this today, she told me to wear something suitable. So Adeline, I hope I'm looking suitable to you right now.
You're looking a lot more suitable than me. I'm just wearing
yeah.
She's got high standards.
Yeah, that's awesome. And then Mike, why don't you tell us more about yourself? It was actually Scott Hancock who introduced us to you and what you're going on. But I know you're also involved in a lot of different projects as well.
Yeah, it's been quite the background for me. So fun fact, I started Bitcoin mining via a friend back in 2011. I mined for 3 days, thought it was a computer virus, and told my friend, I'm uninstalling this from my computer. Very regretful that ever happened. But since that, I've been a professional money manager and trader for the last 10 years. So my background is I was a professional currency trader here in Chicago, and I traded FX. So I traded euro, yen, Australian dollar. So that was my background. And in late 2016, early 2017, a lot of coworkers and I, given that we're traders, we're day traders, we're the guys who would hold positions for seconds or minutes or hours even, right?
Yeah.
We all started slinging cryptocurrency on the side. That's right when the Ethereum ICO came out. That's when Bitcoin last halving took place. And we all got heavily involved. And I was sitting at my desk one day surrounded by some of the smartest people in the industry that I believe. And everyone's throwing large amounts of money into crypto. And I said, well, okay, there's something here. There's a big learning curve for new people to enter the market. And how can I fix that? How can I make it easy for individuals to get exposure to cryptocurrency? Because those were the days when Coinbase, it was very hard to use. Their spreads were crazy. Their transaction fees were crazy and everything else. So I decided to start my own hedge fund. So I started a hedge fund solely long only crypto, completely unleveraged back in the spring of 2017. That fund is still in existence. We're fortunate to have, been having a few good years. Obviously 18 was a little rough, but so I've been in crypto and exposed to these markets for roughly 3.5 to 4 years. And so what we did last year was, it's really when I dove into mining. I always had a 101 or 201 level expertise in mining. I understood the basic fundamentals, but my colleagues and I, we dove into some financial models and said, wow, there's an opportunity here, especially with the next gen stuff that was coming out with the S17 pluses and the efficiency ratios. We said, hey, these numbers make a lot of sense. So a partner and I, we deployed about $2 million of our own capital and said, hey, let's get into the mining game. Let's put our money where our mouth is and figure this out. And we did that in January of this year. We took the mine from concept and around Thanksgiving to full deployment and profitability by January 15th. So to my knowledge, I mean, that's a 45-day deployment. We were moving very, very, very quick.
Yeah.
Yeah.
And, the one thing we had an issue with, well, there's several issues when you begin mining, was we figured out, okay, you have co-location, you have your electric, you have what type of mining rig do you want? You have certain defect rates with those mining rigs. And through this process, we kind of looked at each other and said, hey, this mining stuff isn't quite as easy as you think it is. It's not just buy a machine and plug it in.
It isn't?
And yeah, right. And I mean, granted, we knew there was going to be some complexities, but same kind of principle as when I started the fund. I said, hey, people want to get exposure to mining. How can I make it easy? We've proven it with our own money. We've proven the business model, and we've built our inventory and said, hey, let's make a viable solution for institutional or wealthy individuals, or even individuals with 25 grand that want to get exposure to cryptocurrency mining, and quite frankly, not have to deal with all the bullshit, not have to deal with fluctuating hash rate, not have to deal with power outages or anything like that. And that's kind of what launched us into not only Supplybit, but also providing the hedge mining services that I'm excited to formally launch here on the podcast.
That's fascinating. That really is. Yeah. Tell us more in depth about that.
So if you think about it, if you want to go buy an S19, whether it's the 110 or 95 terahash models, you're going to pay roughly between $32 and $36 a terahash, right? Now, and those are today's prices. Those are prices that I got quoted this morning. If you wanted to go and buy an S17 Plus model, you're going to pay roughly $22 to $23 a terahash, right? So that's your upfront CapEx just for a machine. Now, factor in when you go to a co-location facility, you're going to have to put down a deposit, which is going to range between 10 and 15% of the sticker price of the machine as you put down a month or two deposit. So what we did was we said, hey, let's create a product that is very competitive or very comparative to buying your own machine, but it's a turnkey solution. So we have two different products. We have our premium product, which is $35,000 for 1 petahash. And the nice thing about that product is we guarantee you a buyback. So say you want to buy, and the contract is 36 months. So say you want to, after a year and a half of mining, you said, hey, I want to get out. I'm happy with where Bitcoin is, and I want to get out of my contract. We'll guarantee you that we'll buy it back from you using a 36-month straight line depreciation model. So what that allows investors to do, whereas if you were to go and buy Bitcoin yourself, or if you were to go and buy mining equipment yourself, your risk is 100%. You could theoretically lose 100% of your money. With our premium solution, we're minimizing your downside risk. Your downside risk is 33% a year. So it's a nice way.
Let me just get this straight. Let's say I had $35,000, correct? And I bought a petahash from you, and I started hashing. I hashed for 3 days, and I said, nah, man, this is too risky for me. You guys are willing to buy that back?
Yeah, so there is an initial 12-month lockup. You just can't turn and burn it on us real quick.
All right. Okay.
But the nice thing is there's also pause periods. So say when you come on board with us, we give you all the economics. We hold your hand. We're really a white glove service. You're going to know what your break even is. You're going to know what your OPEX is. All that is fixed. And so you have the ability to say, hey, you know, I don't like the price of Bitcoin right now. I don't want to incur any operational expenditure. So guess what? You can pause that and then turn it on anytime you want. And the really nice thing about these contracts are you have the ability to sell them to a third party. So you have two tangible assets. You have not only the Bitcoin that you mine and acquire, but you have a contract that's similar to like a mineral rights. Imagine if you had a parcel of land that had oil underneath. Well, those mineral rights have inherent value, and that value fluctuates with the price of oil or the good that you can mine from there. The same principle applies to these contracts, because essentially you have a pile of Bitcoin that you're trying to mine. As Bitcoin goes in value, this contract will fluctuate in value. And so what's nice about it compared to other cloud mining services, which I would say we are not a cloud miner at all.
It doesn't sound like cloud mining to me, in the very least.
I mean, my experience with cloud mining has been, you buy a contract and you hope that
you pray that they honor it, that they keep it.
Yeah, and that the website's not just going to disappear in a few months.
And see, that's the nice thing with us is you get daily distributions. You know exactly how much Bitcoin you're going to make every month within a certain degree of depending on difficulty. But with us, what we found was there's really no guarantees in the space. The space is rampant with overpromise, underdeliver. So what my team and I worked really, really hard to do was make sure we have the insurance in place. You know, there's not very many miners with insurance, and I know
you guys are insured. That is phenomenal. That definitely is a game changer for our industry.
And so what that allows us to do, and Scott and Ethan, as I mentioned previously, you guys will receive proof of our insurance today, so that way you can back up the things that we make, and that way you have that evidence. But what's nice about when we're insured is I can guarantee you 100% uptime. So for instance, Ethan, if you're mining throughout the month, your hash power is going to fluctuate as you have rejection rate, machines go down, hash boards go down, things happen. With us, we look at the difficulty rate, and it's a very simple mathematical equation. Here's difficulty, here's your hash power, here's how much Bitcoin you should have mined. We make sure that whatever your theoretical value is, you mine every single month. So at the end of the month, say for instance, you were short a fractional amount of Bitcoin that you mined, we true you up. We say, hey, we're going to true you up, make you whole. And guess what? If you mined more than you should have, that's on us. We wear that risk. You get to keep that, right? Now, we've really designed this to really benefit the client. And the nice thing about the insurance is, say, God forbid, the mine blows up or there's a catastrophic fire or whatever may happen. Well, that insurance allows us to guarantee that you're still going to get paid every single day, that you're not going to have any interruption. And
that is amazing.
Nobody else, to my knowledge, can make that claim in the space right now.
Oh, nobody. Yeah.
And so the best way to think about hedge mining is it's just like you're mining yourself, only you don't have any bullshit to deal with. You don't have to worry about machines going down. You don't have to worry about being insured. You don't have to worry about your capital deployment risk.
You don't have to worry about permits or any of that nonsense, regulations, any of that stuff. You guys take care of everything.
Power purchase agreements and
is that what you call it? Hedge mining? I love it. That's a great name.
I can imagine all these miners right now with S9 machines, and they turn them off, and they just wish they could hit the pause button on their electricity bill. Supplybit, hit the pause button.
Their rent on their facility, or
exactly,
all these things are things that cost money.
And the really nice thing is our OpEx, or if you want to call it electricity, but the cost to run the machines per petahash, per 1 petahash, is $2,000 a month. So it's very flat, easy to understand. Hey, I'm going to put up X amount of money and I'm good for 36 months. Then I know what my OpEx is, and say you want to cut it off halfway through the month. Okay, we just prorate you. It's very simple, right? And then finally, so we don't really make any money on the OpEx, and we don't make any money on the hash power. Where we make our money and where really Supplybit has the opportunity to grow is we charge 15% of coins mined. So what that allows us to do is guarantee you 100% uptime, give you the ability to enter mining at the same cost it would cost you or less than going out and buying your own equipment and doing it yourself. So I think this is a great opportunity to talk about the two different products we have. One is the premium product that's $35,000 that allows you to turn the contract back on us. We guarantee you a buyback. But then you say, hey, Mike, I don't want to buy back. I'm very bullish Bitcoin. I'm long and strong. Okay, well, that's our $25,000 product. And that is 1 petahash for $25,000 at an OpEx of roughly exactly $2,000 a month. And if you look at that contract, it's like, oh, okay, you can go buy S19s and pay a premium at that level, or we're right in line with the F17 pluses. If you go buy the machines new, it's very competitive. And so what we're looking at is saying, hey, guess what? Come to us. Yeah, we're going to make our little management fee, but you have nothing to worry about in terms of machines going down. I mean, especially everyone talking about the big defect rate with one of the batches. I'm not going to name a manufacturer or anything like that. But
we all know. The community knows.
Bitmain.
So, you know, what you're saying is fascinating. And I think what's really important to note here that almost everybody getting into the space doesn't see or doesn't evaluate properly is, you know, they may get all the details right with, you know, what kind of miner they want to buy. They may even figure out all the infrastructure, you know, issues and, you know, how to get power really cheap. But one of the things that they don't ever talk about, I never hear discussed, because I always hear horror stories about everything. My miners arrived broken, or the power company gypped me, or just whatever. But I never hear anybody talking about understanding what risk is in this industry and doing things to manage their risk. And it sounds like what you're offering is something that is I've never heard of. I've never even seen in the industry. You handle and you take care of all of that risk. People will just give you that investment capital. They'll get their petahash, and you handle the risk and you know, guarantee them a return. And nobody else in our industry is doing anything remotely like that.
Yeah, and I'll just touch on that, and then I think we will take a brief break. But that comes from my background in hedge fund. My job as a trader is to mitigate risk. Anyone's barrier to entry, whether it's investing in a hedge fund, investing in mining, investing in equities, whatever it may be, it's risk management. Those are the people that have good returns, that understand how to manage risk. So all I want to do is provide those tools to my clients and give them the flexibility to be great risk managers and have their own destiny in their hands.
Yeah. And we're just going to talk a little bit about crypto mining tools, and Ethan's going to share a little bit about our website and what you could do there. But yeah, Mike, I think it's great what you guys are doing. And after this, I want to learn a little bit more about, you know, what does this mean to you? You know, like what are you able to do with the investment that you receive, you know, for your business, to be able to continue maintaining it and to continue growing it. But yeah, Ethan, why don't you take it away?
Yeah, I just want to again mention our website, Crypto Mining Tools, and you know, talking about risk and understanding risk is really important to have accurate information, and that's what our calculator app helps you do. Our advanced features in the calculator app allow you to give really, really fine-grained controls over expenses and, you know, factors that will change your profitability and your bottom line, and give you what we feel is the most accurate calculation out there. Another really useful feature, and I want to point this out to everybody, is we do have a quantity value. So if you want to know what your total income should be from 200 miners or 300 miners, you can just simply change the quantity. Gone are the days of frustration where you have to go in, you have to figure out the hash rate of one miner, then multiply that by, you know, whatever factor of miners you have. We've made it simple. We've made it easy for you. And then if we go on to our comparison app, you know, once you found a miner and you found the profitability that you feel is acceptable, and you understand the risk with that, we now have the ability to let you compare that with its nearest competitors. Is it really the best choice? Are there better options out there? Are there miners that would be less expensive for you that would give you about the same value? Or are there other manufacturers that don't have as high of a defect rate? So yeah, our comparison app allows you to see that and to know, you know, get that extra step of assurance that you have, you know, made the right choice. And then after you do a comparison, you can go to our shop app, and this is where you can go in the market and again, I'm so excited about this. We're about to release our new user experience on the back end. And this is where the market will be able to list their miners. And right now, Scott and I are just getting flooded with people who want to sell and buy. And it's getting so overwhelming that I'm glad we have this technology in place, because it will be able to handle and delegate and manage a lot of these transactions for us, and do it in a safe and secure way. This is coming from Scott and me. So, you're not dealing with scammers. You're not dealing with hustlers. You're getting, the real market price and what the market really has to offer. And that's what I really like about this. And then after that, you can go to our directory. So if you don't want to deal with the hassle, you can, always go down to Mike, and he will just take care of you. Just give him the cash and he'll do it. But if you, still got that entrepreneurial spirit, and you like to be that, hands-on pioneer, chopping down the trees, building the cabin yourself, here's where you can find the energy for your miners. And we have a very useful tool. If you go into the managed hosting, let's say you're completely new at this, the hosting farms, they want to know, how much of our power do you want to buy from us? How much do you want to use? Well, I don't know this. I'm new into mining. Here you can select the miners that you want to buy, or the miners that you have, put in the quantity, and it'll calculate automatically for you how much power those miners will need. You can add multiple miners, and if by any chance our miner isn't available in the list, you can actually add a custom power value. So when you're getting a quote from these hosting facilities, instead of having to go through and do all the difficult calculations, they're going to already know everything that you need, and they're going to be able to give you a very accurate price.
Yeah.
So, Scott, do you have anything to add to that?
No, that was a pretty thorough review of what we're offering here. And then, that really complements our Telegram channels and Telegram groups where we have buyers and sellers posting, want to buy ads and want to sell ads. We're really just all about connecting the industry to each other, from the vendors and the buyers. And so anyway, that's a little bit about us. And we're able to run this podcast because it allows us to really reach out to our audience, but being able to speak about our services and products is good. So anyway, let's get back to Mike and Scott Hancock here. So Scott, what were we talking about before?
We were talking about risk management.
Yeah, absolutely.
I think a good place to pick up was, if our real competition and your real choices when you come into cryptocurrency, you ask yourself, okay, say I want to allocate funds to crypto for the very first time. You have a lot of choices. Do I want to buy Bitcoin? Do I want to buy Ethereum? Do I want to buy mining rigs? What do I want to do? And so what we did with our service was say, hey, okay, let's say you had $50,000 today. You can go out and buy roughly 5 Bitcoin. You can go out and buy some machines, or you can come to us, and guess what? With 1 petahash over 36 months, you're going to mine between 6 and 8 Bitcoin, right? So if you look at where's my biggest bang for my buck, and where is it the safest in terms of protected downside, tangible assets, a contract that is transferable that I can sell to a third party if I want. If you mine your own machines and your hope is that, hey, Bitcoin goes to 40,000 and those machines are going to gain value, I'm going to be the first one to tell you, yeah, they'll probably appreciate in value, but what's harder to sell? Hard tangible machines or a hash contract where it's saying, hey, I guarantee you're going to get this much power. And so that's our real thing when we went out to design the product. It's not only we're competing against the Genesis mining or the Bitseers of the world, we're competing against other miners. We're competing against going out and buying crypto yourself. So where I look at it from is I put my hedge fund hat on and say, you know what, if you want to move into crypto, it's probably wise to buy some coins yourself, but it's probably wise to get exposure to the mining side. Because if you think about when you're trading, right, we talk about risk management and trading. Well, when you enter a trade, let's say you buy Bitcoin, you buy it at 8,000. That's a decision you have to make. There's 2 entries. When and at what price am I getting into the trade? And when and at what price am I getting out of the trade? So there's 2 big decisions you have to make.
Sure.
When you're mining, you're automatically long. You're generating Bitcoin every single day. So the only decision you have to make at that point is, okay, when do I want to sell? And guess what? If the price was 9,100 yesterday and you sold some and now it's 9,500, you're not kicking yourself saying, oh man, I wish I would have sold at 9,500, because guess what? You got another reward today of Bitcoin that you can sell at 9,500. So when it comes to when it comes to managing risk, that's kind of what we look at, why we designed the product the way we did. Now, let's talk about, why am I in crypto? Where do we expect to go? What is my stance on the space? I've been in crypto for about 4 years, and my background in professional markets, I've worked at hedge funds and proprietary trading shops. And what we're seeing more so than ever, and even today, you can look out at the PCE numbers or the inflationary numbers. Mm-hmm. Wages grew, US dollar wages grew 10% over the last month, and savings have dropped 13%. What does that mean? Is fiat currency or traditional money, your buying power is getting destroyed at an unprecedented rate. Because think about it, wages went up 10%. What do you think is going to happen? The goods and services, those costs are going to go up inherently. We talk about inflation. So if you look at, okay, why is crypto a good asset to have? Why is it maybe better than gold? Well, gold's a great store of value. Bitcoin's a great store of value, but it's the transferability, being able to transact in real time. And I'm sure you guys are familiar with the product 10X. They have a card over in the EU that they have an e-money license. So it's essentially a debit card product where you link your wallet up to it, and you can go out and spend your crypto anywhere Visa is accepted. Mm-hmm. And we're going to see that come to fruition in a big way here in the U.S. and internationally within the next 8 to 18 months. And everyone talks about, Bitcoin's too slow. It's only 10 minutes to block, to transact. Well, here's your bridge for that solution, right? That's how you fix that solution. So in an inflationary environment where you have central banks like the Fed or the Bank of England coming out and saying, hey, we're just going to print more money. And then you have the Bank of Japan, where they've been negative rates for years now. And they came off about a month and a half ago now, and said, we're going to lift all of our restrictions on our easing policies. What is that going to do to fiat currency? Yeah. Well, it tells you that, hey, my buying power is going to be diminished. So where do you really want to be? You want to be in finite assets. You want to be in parcels of land. You want to be in precious metals. You want to be in gold. And guess what? You even want to be in equities. And here's why. Here's why everyone's baffled of why are the equity markets rallying? Well, the short answer is because the Fed's pumping more money into the economy. But the real answer is, and I'm going to use an exaggerated example just to make my point. Say you have $100 today, and you can go to your store and buy one loaf of bread for $100, right? The dollar amount is negligible.
Very nice loaf of bread.
Just say it's a widget. You can buy a widget for $100, whatever it is. And let's say, for example, Apple stock's trading at $100. So you buy one loaf of bread today, and you buy one share of Apple. Okay, that's your buying power of that $100 today. Well, guess what? A year from now, that you go to the grocery store, what do you think that loaf of bread's going to cost you? More or less expensive?
It's going to be more expensive. It'll probably be like $280.
Right. Even if it's only $103 now, where you have an inflation rate of 2 or 3%, right? It's going to be more expensive in terms of dollars. Mm-hmm. Well, you look at your Apple stock and forget earnings, forget any fundamentals of the company, just based on dollar buying power. The Apple stock is going to be $103. So the amount of loaf of bread that you can get for a Apple share versus a loaf of bread has not changed, but the amount of dollars that you need to transact in both of those has increased. So that's why inflation and the Fed pumping more money into the system makes things more expensive. It's not because they've gone up in value. It's because your buying power has gotten degraded over time. And that's why we're seeing equities why they're at. That's a nice tailwind for crypto. And that's why I tell all my clients, hey, you want to be well diversified, not only in crypto. All of my clients, I advise them only do 3 to 10% in crypto. Obviously, I have 80% of my net worth in crypto, but I have a lot of conviction. Right. But, that's my kind of view on the industry. And I think those are very strong tailwinds, along with, look at the global economy. We're more globalized than we've ever been before. And the need to transfer funds and do international business or have an international currency, whether it's Bitcoin or whatever cryptocurrency it's going to be, no one really knows, right? It's hard to predict anything in the space over 18 months. But if you think about the younger generation, you know, I'm only 29, but think about people who are 5, 10, 15 years old. What makes more sense to them? A piece of paper. Think about a 5-year-old. You give them a dollar bill and you say, hey, you can go buy a can of Coke in a Coke machine. They're going to ask you why. Why is this dollar worth money? And the short answer is it just is. And it's because people believe a dollar is worth a dollar. But if you look at the banking system, what makes more sense to them? Oh, I can Venmo somebody or I can Zelle somebody and it's just an electronic funds transfer. There's really, moving forward, I think there's always going to be a need for paper tangible money. But as the dollar or any global fiat currency goes more and more digital, okay, well, your counterparty risk, your third party, your intermediaries, those risks increase substantially. And so over the next 20, 30, 40 years, what are we going to need? We're going to need a bigger asset that I can direct peer-to-peer and control myself. People don't realize when you have a bank account at, you know, JP Morgan or wherever, that's just an imaginary number they just float out there and they show you, okay, that's what they're really touting is their credit worthiness, that, hey, you have this amount here and believe us. And guess what? If you open a checking account, the bank, if you say you had $100,000 in a checking account, you can't just walk into the bank and pull out $100,000. Nope. When you sign up for your checking account, you sign a bunch of paperwork saying, hey, they can refuse you for 72 hours. And I don't know if we have any Ozark fans, but if you remember one of the very first episodes of Ozark, when Marty Bird goes into the Chicago bank that he works with, they're trying to, you know, hinder him from pulling out his money. He's like, no, it's my money. I have the right to. But technically, the banks have a right to refuse you some money. And people don't realize they only keep a small percentage of their overall deposits on hand at the branch. But not to say, I mean, don't get me wrong. I like the banking system. It's treated me well. But my point is there's a demand and there's going to be a need for cryptocurrency and the ability to transact in these manners. So really, fundamentally, the way I look at it is, how the hell can I acquire as many Bitcoin or whatever crypto that I want in the meantime? My big bet is demand is going to outpace supply.
We can all tell Mike knows what he's talking about with his hedge fund experience. And, you know, a lot of the audience here is obviously long on Bitcoin. Everybody wants to mine themselves. They've been mining for years. Why would you want Supplybit? Well, think about last year around this time in May, when the price of Bitcoin was going up, you looked at the hash rate, you wanted in right then and there, and you couldn't get machines. You might have to wait 2 or 3 months. So you can buy this Supplybit hedge mining contract, get your hash power right away. In addition to that, if you think you're so great at mining yourself, then go ahead and buy your new machines and wait the 2 to 3 months while you're mining with theirs.
And have to get permits and build out infrastructure to host.
So you can really mix and match and use this product really well, even if you are mining yourself.
And that's a really great point, Scott. The nice thing is we can do anywhere from 1 to 100 petahash and get you turned on today. You know, longest turn on time is
100 petahash would turn me on.
I'm already feeling sticky.
So that's the nice thing is you have scalability. We're going to hold your hand every step of the way. For instance, if you mine with us, you get access to all of our hedge fund insights and you get access to me 24/7. Again, we're a boutique service. I'm your biggest champion. We're only going to succeed if our clients succeed. And what's really nice about that, at the end of the month, you're going to get a report that kind of breaks down, okay, here's how many coins you mined. Here was your power consumption. So you can, if you're really into analytics, we give you the ability to really dive down and get to the granular level with however you want to financially model your mine. And we're going to be the first ones to call you up. Hey, Ethan, hey, Scott, you know, your mine's Bitcoin price is low. You're below your break even. Do you want to turn it off or leave it going? Now, as we know,
that is in itself amazing.
Yeah. I mean, I have miners hosted at a facility, and, you know, once in a while they'll send me an email saying, hey, your miners are offline. And I just kind of have to, you know, wait for them to turn it back on or fix their power. But, you know, I mean, getting a phone call, you know, in advance from somebody saying, hey, you know, you maybe want to pause your contract.
That
sounds revolutionary to me.
Yeah, So yeah, mitigating the risk, being able to have instant access to hash power, and being able to manage, your mining opportunity, I think is a game changer. Yeah.
Well, that's awesome. So we're coming to the end of our podcast episode today, but usually, when we end, we just want to make sure that our audience knows where to find you guys. So Scott Hancock, where do you hang out online?
Yeah.
You can find me on Telegram at Crypto Mining Scotty. Also Twitter, Scotty Bitcoin. You can email me at scott@cloudaimint.com, and also the Supplybit, scott.hancock@supplybit.io. So look forward to speaking to all of you soon again.
Awesome. And Mike, how about you? How should people contact you?
For me, I fly under the radar. I'm not on Twitter. I'm not on Telegram, very briefly, but I'm just Mike@supplybit.io, or you can find me on LinkedIn at Mike.MikeRoth, or you can find our company at supplybit.io. And then I ask that if you go to the website and you're curious, please drop me a line and just mention that you heard us on the podcast, and I'll be happy to give you a discount.
Awesome.
That's awesome. That's awesome.
Well, great. Thanks again for coming on here and teaching us a little bit more about hedge mining.
Hedge mining. You heard it here first on Crypto Mining Tools.
Hedge mining. All right, guys. Have a great day. Have a good weekend, and
Thanks.
we'll hopefully talk
See you guys.
again.
See ya.
Take care, everybody.
All right. Bye.